Welcome to T&M TV News. I'm Brian Sylvester. We start this week with gold, and market analyst GFMS predicting that gold prices are set to ease off a little, at least in the near term. GFMS released its full Gold Survey 2009, which says that 39 million ounces of gold scrap entered the market in 2008. That's more than 8 million ounces above 2007 levels. And that extra gold will soften prices until the excess scrap is absorbed. The surge in scrap caused a virtual saw-off versus the year-over-year declines in mined gold production and official sector sales. Another gold price bellwether, jewelry demand, suffered a 10% drop to about 69 million ounces, mostly due to high gold prices and the global recession. The good news is that GFMS remains bullish on the longer-term price of gold because of the growing likelihood of substantial inflation. The rumor mill was churning a little faster this week with the notion that mining titan BHP Billiton is preparing a bid for Vancouver's Teck. The news sent Teck B shares above the $10 mark in heavy trading. Long-suffering Teck shareholders have been greeted with a string of good news events lately, including the takeover talk, higher copper prices, and a better-than-expected contract for metallurgical coal. In recent months, Teck has unloaded a number of assets to raise cash to restructure a $5.3 billion bridge loan due in October. From risky business to even riskier business, here is senior staff writer Ron Mandel with a report on the up and downside of mining in Russia.
Is Russia the last frontier for mining companies? This was the question on the minds of delegates to the Canada-Russia Mining Conference, which was held in Toronto in March. Russia is doing its best to attract mining investment. The Russian economy is cooling off rapidly, with some analysts predicting that Russia's GDP will contract by 5.6% this year. So the government is trying to expand mining to mitigate the slowing economy. Last year was not a good year for the industry, as spending on exploration declined 20% to 115 billion ruble, or $4.3 billion. Clearly, the mining potential of the country is vast. It is the largest country in the world and has world-class resources of coal, palladium, nickel and diamonds, and considerable resources of platinum, gold, silver, and many other minerals. Underlining the Russian government's desire to see more mining investment was the participation of a senior official, Denis Khramov, a director in the Ministry of Natural Resources. Khramov went over the new Strategic Sectors Law, which regulates foreign investment in mining. On the positive side, the new law clarifies the rules for foreign investments in the sector. But at the same time, the law makes it possible for the government to expropriate any mineral deposit considered strategic. Other negatives are recent examples of strong-arm tactics by the government while dealing with major oil companies. Many observers say that there is a high degree of corruption and political interference in Russia. But there are also positive examples. One of them is Kupol gold mine, 75% owned by Kinross Gold. Mining companies considering investment in Russia should do it with their eyes wide open, realizing that with a huge opportunity, there's also risk. They should look for good local partners and be ready for a high degree of government interference, as well as bureaucracy and possibly corruption. For the Northern Miner, this is Ron Mandel in Toronto.
Thank you, Ron. And finally, here's Northern Miner editor John Cummings' report on platinum and palladium ETFs.
Dovetailing with a recent rebound in base metals, platinum and palladium prices posted 6-month highs around the Easter break, with platinum above $1,200 an ounce and palladium touching $239. Since New Year's Eve, platinum has soared 33%, palladium is up 28%, silver's gained 14%, while gold has lagged with only a 1.8% rise. Some of the PGM excitement comes from London-based ETF securities filing for 2 exchange-traded funds to be traded on the New York Stock Exchange. One will be backed by physical platinum and the other by physical palladium. These would be the first ever platinum or palladium ETFs traded on a U.S. exchange, though platinum exchange-traded notes are already available in the U.S., and there are existing offshore platinum and palladium ETFs. Hopes are strong that these new U.S. platinum and palladium ETFs will prove as successful as the American gold ETFs. These were also slow off the mark, but quickly grew to account for 70% of all gold held worldwide in ETFs, and simultaneously drove up gold demand and prices to all-time record levels. Recent developments in Asia were kind to platinum and palladium too. Car sales in China are surprisingly resilient during the global recession, with passenger vehicle sales up 10% in March to record levels, which can only support demand prospects for PGMs and auto catalysts. In recent months, China surpassed the U.S. in total passenger car sales, though comparing automobile categories between countries is difficult. Of note, minivan sales in China are up 40% in response to government subsidies totaling 5 billion yuan that are designed to help rural residents buy vans and light trucks. In Japan, the government unveiled a record $153 billion stimulus package that should support the nation's major automakers in their manufacture of PGM-consuming cars and trucks. Meanwhile, Russia's RTS exchange announced it would launch trading in platinum and palladium futures contracts from April 15th, adding to their roster of contracts on gold and silver. The contracts will initially be for 3 and 6 months and will be settled in cash based on the London Morning Fix. This is John Cumming, editor of the Northern Miner.
That's all for this week. Thank you for tuning in.